Alright, welcome back. Hope you guys are well. Welcome back to your channel. So today we are gonna cover market structure. So many people think market structure is just higher highs, higher lows, lower highs, lower lows. Simply that is exactly what market structure is, but many people have been taught wrong what it is. Because in today's video we will cover how to clearly identify market structure. So I created a quick 5-minute one yesterday. It was a bit rushed, so today I thought I would sit and create a more in-depth video, and this will cover everything from your very basics to getting into actual candlesticks and getting into the chart and identifying there. So with that being said, I am Mark Dad. I've been training for just over about a year and a half, and you might say, yeah, you've only been training for a year and a half, but I don't want to be your mentor, your guru, whatever it may be. I'm creating this content just so because I didn't have someone one step ahead of me to help me, and that's what I want to do, is be one step ahead of you so you can learn from someone who's recently gone through everything and finally understands it. So with that being said, let's get into today's video. Alright, so as you can see here, obviously this is a 1 hour time frame. All that doesn't matter. Structure is, for me, structure is defined by 2 candles minimum. So what this basically means is if it is just a single candlestick in the opposite direction, it doesn't really matter. But if it is one candle pushing up and then you have another one in the center, for instance, these are really ugly drawing, and then you have another one down there, that I would obviously consider a 3-point structure. Or most importantly is, if we just look here, that would be probably 2 points, 2 points, 2 points, 2 points, 2 points, 2 points. When we come back into our chart quickly, that one candle there is not structure, but those two there are structure. You might say, okay, but is this structure? Yes, that is structure. It's got 1, 2 points. It's got 1, 2 points. It's obviously very small, it's tiny, but that is what structure is. It is 2 candles that form a rounded swing point. The key there is that has to change direction. If it doesn't change direction, you cannot include it. So like there, obviously yes, that changes direction sideways, but it is still going straight up. It is still bullish. Where if you take something, for instance, even here, this, here price goes up, price goes sideways, price goes up. Here you could regard this as structure because there's so many of them. There's more than just one. There's like 1, 2, 3, 4, 5. Again, this I would not consider a strong structure point at all. Personally, I wouldn't even consider it a structure point. Some people do consider this a structure point, but for me, I personally like to see a change in direction. So something like this, push up, push down, push up. This is, I would say, just a consolidation range. We see that clearly by the dojis, and then a push up. So you could possibly count that. I would not count it though. With that being said, let's get back here to identify what is a higher high, what is a higher low. And you might think, yes, this is very basic stuff, I know it, I've seen it on Instagram, I've seen it wherever. But the truth is, your higher high cannot be formed, your higher low, cannot be formed if you do not have a higher high, right? And it might sound a bit confusing, but I'll show you here. This is specifically for bullish. If you have a higher high, and then you have currently that, you can't count that as a higher low, because in order to have that higher low, you've got to have that higher high. So currently that is your higher low. We push up, we create a higher high. Now this, remember, your higher low always lags behind. Now this becomes your higher low. So that's high high, higher low. Price here, this is not a structure point. This is just a point at the moment, because the price from here went and just did this and consolidated between these 2 points, you cannot consider that structure. That is just how it is. So with that being said, we get another higher high and then a higher low. Again, random point, higher high, higher low. Your higher high is created when price body closes above the previous structure point. So a really good example, obviously this is a live chart, but if we have a look over here, price is currently, if we do close like this, price is currently closing above it, which means that this is now creating a higher high, and we'll probably see another candle will pull back to create that higher low. So that's what I mean, is we can even though we are bearish here, we were bearish, you can clearly see that by that sort of downtrend. If you want to pull it up, particularly don't like using trend lines, but if you want to, and now you see you're getting that break of the trend line, you form that higher high. So I hope that provides a bit more clarity. Same applies with when we are bearish. When we are bearish, you have your lower high, right? And this lower low cannot be formed until the new lower high is formed. So your lower high cannot be formed before your lower low. So you get your lower low, then you get your lower high, right? This lower high stays here until your next lower low is formed, and then that you get a lower low, price pushes up, price breaks that low, you get a lower high. If price does not break that low, whatever happens between here, like I said, whatever happens between here is honestly irrelevant. Price can go even backwards in a circle, whatever it wants to actually do. It is not regarded as structure, because those are your two swing points, and unless broken, you have not broken structure. If you broke the lower high, then you shifted structure. But a break of structure is going lower high, lower low, lower high, lower low, lower high, lower low. Right. So we've got our lower high, then we had that break, and now we have our lower low. And then we have the break again. This becomes our lower high. Break, lower low. Price pushes up to retest, break, lower high. Once you have that break, that becomes a lower low. And with that being said, that is literally what market structure is essentially just understanding that you cannot have a lower high form without a lower low, and you cannot have a higher low form without a higher high. So with you understanding that, we'll do a quick example here. Is we're going to see if you can get this obviously correct. Okay, nothing too hectic. Let's see. So this is obviously bullish, right? And we're gonna work through it. Sorry, we'll work through the bullish example, and then we'll work through a bearish example. So here we have our higher high, higher low. What is this one? Nothing. We get a higher high, we get our higher low. So now these points within here, are these structure points? Can you put a stop loss behind it? Can you regard them as a structure point? No, you can regard them as a point, but they are not structure, because unless we get that break, once we get that break, this higher low becomes there. Oh, we get that break, this becomes a higher high, and that becomes the higher low. Price comes back into this range. This, even though price gets super deep, you cannot regard this as a higher low. Yes, it is higher than that low. Like we said, you have to either break the higher high or the higher low to create a new point, new structure point. Now you got your higher high, now you got your higher low. Right, so this is how this all works. Now you get your higher high and your higher low, and then your look at that. So you guys all thought I was going to say this is going to be, now we get our higher high, but if you look, price is not broken how low or how high, price is just within it. So what we have to wait for price has to, if we break there, we are shifting structure, but we just waiting for price clearly to just go from here, give us that break, give us that retest, this becomes your higher high, that becomes your higher low. So this is literally what market structure is. It is nothing more than identifying 2 points with 2 candles minimum and taking it from there. Some people say, yeah, but one candle doesn't affect. If you have to go onto a line chart, you'll see that price is literally nothing. That one little candle, yes, it does show a small little indent in the price, but you cannot put your stop loss behind one candle. If it is a reversal candle like this, yes, you can, but again, look at what is around it. This is a beautiful evening star, well, shooting star and bullish Mariposa. But look at that, you get 1, 2, 3 points. Here you get 1, 2, 3 points. Here, many people will be like, yes, that's structure. For me, that is not structure. That is just price taking a break. Price literally doing exactly what it did over here, is just hesitating before getting a push up. That there is not structure. That there is structure. That is structure. And only once that high is broken, and that is with a body close. You get tiny little body close. This becomes your higher low. That becomes your higher high. Then we get that break, higher high, higher low. We get this beautiful push up, higher high, higher low. Right. What we need to do is put these over here, just so it's a bit more here. So we get higher highs, higher lows, which is super cute, right? We get our higher high, and we get our higher low. Again, unless we break out of this, we are not shifting structure. We broke out of it, now we've shifted from bullish to now bearish. We got that retest, and then we would obviously have our lower lows and lower highs coming into play now. Is you would have, this is quite an interesting one here, is you have obviously your break. So then once you have your break of that structure, this becomes your lower high, and this over here becomes your lower low. Right, just once we have that low break there, this is your lower high, this here is your lower low, and then once we get that break, this becomes your lower low, this here becomes your lower high. So if you look at price here, we get 1, 2, 3 candles. You would say, oh, but this is not structure. Yes, it is. 1, 2, 3 candles. We get that beautiful swing point. Then that becomes your, you went from lower low to lower high, so we broke, we shifted, and went bullish again, and we stayed bullish until we broke there. So basically we're looking, this is obviously a bit more complicated now, is we shifted from bearish to bullish. So this is your higher high, this is your higher low. Right, when we're in this range, like I said, when we're in this range, nothing matters until we get that break. Once we get that break and we get our lower low, then our lower high is formed, which is there, and we are no longer bullish. You can forget about it unless we get a body close like this in the next 18 minutes. We will then shift bullish again, and same thing would apply. Wait for our higher high and then our higher low. This is literally not, I honestly wish someone explained this to me earlier on, but that is the beauty of it, is that when it comes to analyzing whatever charts, forex, cryptos, give it a chart, give it a structure. That's what my job here is to educate you on how to analyze whatever chart, is not analyze specific chart with ICT or fair value gaps or whatever other fun stuff people want to call it. So with that being said, we can just quickly run over this quick market structure sort of here. It does look a bit hectic, does look a bit confusing, so that's why I wanted to run over this, and we'll then just end it off from there. So I'm just going to draw it out on a line chart and basically take it from there. We won't do too much. Okay, so this looks really a lot and quite confusing, to be honest. But this is why, if this helps you, and this is what you've got to spend time on when you first start, is you got to spend time drawing up your highs, your lows, your highs, your lows, your highs, your lows, and just so you can drill it in your head, and that it literally becomes second nature. So we come over, look here, we were obviously bearish, but we'll just take it from here. Is we've got our higher high, our higher low. We shifted and we went bearish. So what does this become? This becomes our lower high, even though it's not technically lower. You have to first have your lower low, right? So we get that shift, we get our lower low, we then get our lower high, right? So boom, boom. But now look at the chart. Price has not broken and retested. So we have our lower low, and our lower high is still technically above here, because no other, we had no shift. Price can come all the way back here and do whatever it wants in between these two. We have not broken. Until we've broken it, we have not shifted bullish again. So we get our, here's our lower low, we break, there we get our lower low, because it's obviously lower than that one. This then becomes our lower high. Price breaks up, we get our higher high. Now we are waiting for our higher low, right? Price breaks up, we went for our higher low, went for new higher high, have a higher low there. Pricing came all the way back, boom, broke there, and this has now become your lower low. So we had a higher high and now a lower low. So boom, boom. So now, like I've said, is price is bearish until we get a break above this higher high, or you say higher low, just so you can understand a bit better. Keep it as your higher low, right? Your low low, low high. We are still bearish if we are in this way. Here we get our small little break, so we got lower low, and this then here becomes our lower high. Price breaks out of that, we get our higher high. Price comes back, price hits our higher high, doesn't break it, comes back into our zone, breaks it. This then becomes our higher high, this becomes our higher low, right? Whatever happens in between here, doesn't matter. Boom, price breaks it, we now have a lower low, right? Boom, price comes up, pulls back, breaks it, breaks that there, we get our lower high, and now this becomes our lower low. Price breaks it, we get our lower low and our lower high. So I'll cover entries in another video, but essentially what you want to do is you wait for a certain pattern, you wait for your entry model, whatever your entry model might be, and you enter on this pullback. So for instance, if we have to just go back to here to this lower high and lower low, on this pullback, if you were to obviously take a position here, once you get your entry, your stop loss goes above there, because if price breaks above that point there, it is shifted structure. You're completely wrong. But again, price can come all the way back to here, touch that line, and then drop, and you're still bearish. So that's literally the importance of understanding market structure properly, is understanding what is a high high, what is a high low. Understand that your lower high cannot be formed before a new lower low is formed, and your higher low cannot be formed until a new higher high is formed. With that being said, that wraps it up for this video. I hope you understand. If you have any questions, just drop them down below, and stay tuned. We're going to try to release a video every single day for this whole year. It is a lot of videos, 365 videos odd. There's a lot of videos that we are going to produce. We're going to cover everything. We're going to create a short course later on as well. There's a lot coming. So yeah, stay tuned for that.